In today's episode, we're going to be talking about some of the major pullbacks in some very big companies, mostly tech companies, that you need to keep your eyes on because the sales won't last long. So without any further ado, let's talk about some of these plays. The first one on our list had a 52-week high pullback of around 80%, and that stock is Lemonade Company. You might have heard of them if you were following the channel along, where we talked about them near their IPO. But this stock is one of my favorites when it comes to insurance company plays. As you guys might be familiar that love Warren Buffett, he's also been a very big fan of insurance companies, but he hasn't actually taken his play on Lemonade because he's more of an old school cat, and for him, tech is very hard to understand, which luckily on this channel, we love to talk about tech. So Lemonade happens to be one of my personal core holdings, but long term, I see myself adding to this position, especially on drops like this, where we see an 82% drop from all-time highs. Now, the next one, I actually don't personally hold any shares in, and that's because I've seen this stock as extremely overvalued, but at these levels, it seems like it might be a good one to snag up. And that is, of course, Peloton, ticker symbol PTON, which has also dropped right around 80% as well from its 52-week highs. Now, the next one I was also somewhat pessimistic on once it hit all-time highs right around the $100 to $120 range, and that was because it was extremely overvalued and for a company that could easily be taken over by one of the giants like Amazon. I was extremely pessimistic at that valuation, and now it's sitting at around $40 per share, and that is Chewy. Yes, I'm talking about the online retailer for pets. And even from their 52-week highs, they're down over 60%. And another one that's down over 60% as well is one of my personal favorite companies, DocuSign. Now, I personally didn't own any DocuSign when it was around $300 per share, but now that it's dropped into the $100 range, I am starting to pick up more shares. But that stock hasn't been hit as hard as the next one on our list, which is Smile Direct Club. Now, I've been a fan of Smile Direct Club since around $10 a share and started to buy in heavier around 8 and even heavier around 5. And now I'm like, oh, I got to double down again because it's sitting at $2 per share. Now, I do believe that this stock has the potential to reach $20 and even $30 per share in the next 2, 3, and possibly if it takes them a lot longer than what I think, it could take up to 5 years time to get to those levels. Now, it has been near that $20 range before, so I don't think it's entirely impossible, but the big hurdle that they need to overcome is their profitability. They haven't been profitable yet. Once Wall Street investors see that each and every quarter is increasing in revenue, and not just that, but the actual profitability numbers are there and they're staying profitable quarter after quarter, then we can see a big drastic increase of this stock's share price. But from the 1 year mark, they're down nearly 90%. So for me, this is a no-brainer stock to double down on. Now, the next one from its all-time highs is sitting only about 40% down, and that is Dropbox. And this is a company that has been profitable for many quarters. And when you look at the stock chart, it's actually going through what's called the cup and handle pattern. And as long as it finishes out that pattern, we might see a $30 Dropbox in no time. And the next one on this list that I think you guys should start paying attention to, especially with the most recent news, is that of SoFi stock. Now, of course, I've been buying up these shares every single time it dipped. And the most recent dip, we saw a stock price of SoFi at around $12 per share, which is an absolute great buy in my opinion, especially with their latest news of overcoming their regulatory hurdle of officially now becoming a bank. So it's very likely that in the short to medium term, we will see this stock price probably reach new all-time highs, which will be great for anyone that has been buying the dips on this stock. Now, the last one on my list is a company that we've talked about on the channel before, and we made an absolutely immense trade on that we also talked about on the channel as well, and that was a company called QuantumScape. If you haven't watched my previous videos over a year ago, that's one of the first companies that we started covering on the channel and really haven't touched since. But now that it's sitting below $20 per share, I have started buying back into this stock. If you're unfamiliar with what happened, well, in the last year and a half, QuantumScape came onto the public market at around $9, $10 per share. We started buying into the $12, $15, $20 range, and immediately, literally in less than a month's time, it shot up to $120 per share. So fast that I had to make a quick update video saying I'm getting out of this stock. And luckily I did at around $90 to $100 per share, because soon after the stock had plummeted, and now obviously we're sitting at below $20, and that is almost as far down as the initial IPO. Now at the current valuation, even though they're not profitable, that puts their market cap at around $8 to $9 billion, which I have no problem buying this stock at these ranges, but I will be dollar cost averaging in whether it goes up or down from here. Obviously, because this stock is not profitable, but the company tech is very, very lucrative. At least that's what the executives over there have to say about it. And if it's true and the technology is as great as they promise, then we might have a very, very nice buying opportunity on our hands, especially if this stock goes any lower. And a big reason for my opinion of this stock going up and why I'm buying this stock now is because of the fact that they're not just focusing on EVs, but first they focused on the technology of battery cells and are now moving to other battery applications outside of EVs alone, which could be a huge, huge step into the right direction for a stock like QuantumScape. And of course, this is just a small list of companies that have all moved down quite significantly from their all-time highs, especially when we're talking about the tech sector as a whole. There's a ton more companies that we can mention in this list. And if you guys really like this video and you want to see more videos like this, make sure to smash the like button. And I also noticed that about 80% of our viewers aren't subscribed to the channel, so it would mean a whole lot if you just smash the subscribe button as well. And thank you all so much for watching. I'll see you guys in the next episode. Peace out.